Hi, this is Andy Nathan with Creative Construction Chronicles, and I am here with Randy Langerford. Should I started that? I should have asked you that before also. Langenderfer. Am I saying that right?
Langenderfer, just Randy.
Langenderfer.
Langenderfer,
Okay.
Langenderfer.
I knew there was a question I forgot to ask you, so I'm here. I'm here with Randy Langenderfer from InvestArc Properties. So just going through Randy's history here, he is the founder and president of InvestArc Properties, as I mentioned, and general partner in over 1,500 doors, representing $350 million in assets under management. He's invested over 4,000 units total across Texas, Oklahoma, Arizona, South Carolina, and Louisiana. His investment strategy focuses on providing passive investors significant returns, learning how to speak to you again today. Blah, blah, blah. So it's a new thing. He's passionate about the busy and professional achieving their goals in real estate, and has been part of several national education programs, is currently a private multifamily coach. With that, Randy, thank you so much for joining. I'm sure you could do a lot more justice to your bio than I can, because you probably know it a little bit better. Why don't you tell us a little bit more, go into a little bit more details about what you've been doing for investing, and we'll go from there.
Hey, Andy, thanks so much for letting me be in the show. It's a pleasure. Appreciate the opportunity. And
You're all choked
my
up
journey,
from running.
my journey started about 11 years ago, 2000. Well, before that, in about 2010, I was working for a private equity firm living in Cleveland, Ohio. I currently live in Houston, Texas. I worked in Cleveland, Ohio. I was working for a private equity firm. And if you know anything about private equity, they have a fairly short horizon, 5 years max, around there. And so I was going to need a job. And I was also working for private equity, really afraid that I was going to get laid off, not for any performance related issues, but just strictly because I had was an executive, I had a good number on my back as a cost reduction potential. So that really forced me to start finding other opportunities to make an income versus a salary. So I started looking at everything, small businesses, and to buy a property, to buy a franchise, a lot of different options I reviewed. And I came upon real estate. I had a brother-in-law who was fixing, he'd gotten connected with a group fixing flipping in Miami-Dade County. And so my first entree into real estate was a hard money lender living in Cleveland, Ohio, to a group in South Florida, Dade County, Miami, buying and flipping houses.
Nice.
And
So,
did that for several years.
okay. So can you tell us a little bit more about some of the type of properties, like single family? You said single family, going to,
Single family, traditional, three twos, 1,200 to 2,000 square foot, hopefully had a garage. And that was coming out of the Great Recession. We were buying houses at probably 65 cents on the dollar, buying them, putting 20, 30, maybe 40 grand in them and flipping them for a pretty handsome profit. We were the hard money lenders. We were providing the cash, so we just made an interest rate return and we shared a very little bit of upside. But and then I got scolded. I didn't get scolded. I got a hard lesson when the last one I did, the group we were working with had a professional divorce amongst the two people, and we got stuck holding a bad asset. And so that was one of the lessons learned there is, as always, really know who you're working with. And it was a good run. We did, I don't know, probably 8 to 10 different properties over a period of about 2 years.
okay.
And we made a good buck, but that wasn't really sustainable for me. It was a nice side income, but it wasn't sustainable. I moved to Houston for business purposes. I had to find another job, and so I found a job as a large academic medical center
Okay.
here in Houston, and came to Houston. Figured it was the fourth largest metro behind Chicago, as the fourth largest metro. And I got to be able to find something there to do real estate. And so I just started attending every um, real estate investment group there was, and I got plugged into this one, and I heard about Lifestyles is a coaching mentoring group here in Houston. They're now nationally. But
Okay.
I went to one of their expos and I heard a guy by the name of Brad Sumrock speak. And so um, I was just enthralled with multifamily. The fact of being able to buy larger assets um, with other people's money. And so that embarked upon a journey to start. I started investing passively in other people's offerings. And I
You're talking
still
about syndications, correct?
correct. A syndication for your listeners is just that a syndication of investors who come together to purchase a large asset that nobody can afford on their own. So if it's, if it's $1 million and you got to put in 30%, you got to raise 300,000 from your friends and family and go out and take a $700,000 note on on the difference.
Yeah.
And those go much bigger. Today, there's tens of millions of dollars those are flowing through there. So I learned the syndication business is really the art of what I've done the last 10 years, leading up to my corporate exit in the middle of 23, and I'm doing real estate full time since. So
Nice. That's awesome. Yeah, no, syndications are great. I love I love the single families. I don't know. I want a big single family, like a 5 bedroom, 6 bedroom single family. I mean, we do some fours. We might touch a three. I don't want anything less than 5 bedrooms because
really,
when it's a bigger house, so I was mentioning that we're doing a flip before we got on the recording, and that's a 4 bedroom. I mean, you could get more money for that when you're doing the flip. Plus, also, you get families who will buy into the property. So
that's
if you
true.
have a 2 bedroom, like a lot of times you have some of those older houses, they're like starter homes where like it's a 2 bedroom, 1 bath. The problem is that, a lot of people don't want a 2 bedroom nowadays. They want a three, a four, a 5 bedroom. They want bigger. And those 4 and 5 bedrooms sell a lot easier than the 2 bedrooms do. And I'm not saying that's exclusively true, but I found over time that's easier to sell your 3 bedrooms, your 4 bedrooms, your 5 bedrooms.
That makes sense too, especially today when somebody wants a home office or someplace to one of the husband or wife or whatever whoever lives there.
Since
Uh,
we're both in home offices, I agree.
yeah, there you go.
Yeah.
I mean, it's a phenomenon that's here to stay.
Yeah. I
Totally.
mean, I've been working pretty much on and off from home for about 15 years. So even before COVID, I was working from home. I never understood the point of going into an office. My dad actually worked from home starting when I was about 12. So I saw that. I'm like, he did well. He was able to do that. I mean, it makes sense. Like have a bigger house, home office. And you
Yeah.
have a place also for your family to grow. So that's one of the great things about that.
Well,
Uh,
and when you're renting to families, you're going to get a much better tenant too. Somebody that cares much more about the property if you have to rent it for a while.
100%.
And it's just a whole different tenant base than somebody who doesn't have any kids and is just a transient in their career.
Yeah, we had a single family that we just put on the market about a week or two ago, and we had to rent it out for 4 years to the same family. And by the way, she was the greatest tenant you could ever imagine. I mean, she was cleaner than anyone her house is cleaner than my house, and she had 4 kids under 18. The problem was she was Section 8, and two of them turned 18 this year. So she phased out of a 5 bedroom house, so she had to go somewhere else. But she was such a great tenant. And I'm just like, we're gonna sell this property. I mean, it's actually appreciated a lot because of COVID and because of the pandemic and everything that's happened. But at the same point, like we're not gonna find a better tenant, and the property was in great shape.
Well, you
So
got the best of both worlds. You rented it, leased it for 5 years or whatever you said, and then
yeah,
sold it and
yeah, we're
while
working
appreciated
against
it.
it right now. So if anyone wants to buy something on the south side, we have the property. That's a quick detour on the
There you
conversation.
go.
I'm gonna switch back though to you. I know we had talked a little bit about like things that happen when you're a property manager, stuff that happens when you're having to manage that many units. Can you talk about a time when something happened at the property and what you learned from that? I know that's a lot, so I'll probably break down that question and just say, tell us a story. Tell us a good story about something that happened to you.
Well, my favorite one is I mentioned I was trying to build transition from my corporate career to real estate.
Yeah.
And I wasn't one of these guys that was just going to turn it off and go to $20,000 a year income because my wife liked to eat. So, so I was transitioning. And my very first, I told you I had started to buy in passively to other people's syndications. And when I did that, we finally got up and found an asset we wanted to buy in Beaumont, Texas. So for your listening audience, about 150 miles due east of Houston, right on the coast between Lake Charles, Louisiana, and Houston, if you're familiar with all. Anyhow,
Yeah.
we bought a 139 unit, about a 1965 build, flat roofs and chillers. So there's the first lesson learned is I heard a mentor tell me, Randy, don't do it because flat roofs leak and chiller boiler systems are very difficult and maintenance heavy. Like every guy probably on your listening podcast, we're all bullheaded and stubborn. And I said, I can do this.
Never.
So, you know, I can make this work. So we bought this asset. And then Andy literally, excuse me, 2 months, 2 lousy months into the asset, I'm sitting in my office at work, and I get this call from our property manager, our on-site property manager. Hey, Randy, the building's on fire. Oh my gosh, what do you mean? Yeah, sorry to tell you, we got the fire here. They're working on it, and I'm like, long story short, 28 of the 139, one of the buildings was taken out. 28 of the 139. I had a tenant who had charcoal grill or a gas grill on the patio.
Oh,
Well, there's another lesson because
no charcoal grills.
no charcoal grills or no propane or anything, grills on the patio. They had flipped over and caused a fire. Some we could have concluded she may have even done it intentionally. I don't know, but another thing, I don't know what it's like in single family, but in multifamily, you're not allowed to have those for insurance reasons either. So because of that very reason, insurance company doesn't want to insure it. So luckily, we never had to face that fight with the insurance company, but we did have 28 of the 139 units go down, and it's they send me the news clips. So literally local news was out there that night, filming it. And
Local building burned to the ground.
scumbag tenant, no, landlord, I mean, scumbag landlord, no, it really wasn't bad like that. But so the story goes on, we get the fire contained, it puts out, and the first thing you tend to think about, like me, I'm 150 miles away, so I wanted to get out there, but I couldn't get out there that night. I did get out there, I think, the next day. But really, your mind goes towards the tenants. So, lesson learned there was call in American Red Cross. They come in and help the tenants find immediate housing. They'll give them vouchers for a couple nights in a hotel, food vouchers, etc. So, I tend to look at the finances and think, oh my gosh, the world's on fire and all that, how that's going to kill our deal. But the reality is, worry about your tenants first. And I think if it ever happens to you in single family, I think if you own enough single family homes and you're in the business long enough, you're going to have some kind of fire, you're going to have some kind of crime committed on your property, no matter how good you screen tenants. It's not just a
Crime we've
deal.
definitely had.
What's that?
Crime we've definitely had.
Yeah.
Actually, I think one of our properties that we bought, the person who owned it, we partnered with somebody and they were looking to sell it, and I think there was like a double homicide in the property, which is why it was empty. We didn't see any blood or anything like that, but this is what apparently all the neighbors told us, that that house is haunted or something like that. We still sold it, but I don't know. Because it's not like you don't have to disclose, I think, like if someone was killed in a property, and we weren't also the owners, so we didn't have full confirmation, so we didn't research it.
Right.
But
Don't ask, don't tell.
yeah, but because it was just something that we were told. But yeah, we actually have a property right now that we had to fix the back siding of the property because the house across the way went on fire and the embers actually burnt the back siding. So we actually were fixing it last week, I think.
Was it wood or was it vinyl?
It was vinyl.
Yeah.
So, but that's fun.
Were you able to get it on their insurance claim?
No, we have a maintenance guy who does work for us that I think we did it all for less than our 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 insurance is like because we're general contractors, so we have our policy premiums at like $5,000 or $10,000, and I think the entire
Sure.
work was like $1,000. So we're like,
Oh, nice.
we don't we don't get the insurance involved unless we absolutely need it. Like a
Gotcha.
fire like what you faced, 100%. And by the way, have insurance. I'm assuming that was one of the things that you learned from that, and you probably it sounds like you had insurance based on what you said. But like we don't get the insurance company involved unless it's a real emergency, and that's because we can't put out like, hey, if there's a $50,000 like fire or something like that, then we 100% would have reached out to the insurance company. But our goal is to not reach out to them if we don't have to.
Well, that makes a whole lot of sense. And in multifamily, the lender requires you to have that kind of insurance.
Yeah,
The lender requires you to have loss of income. That's a beautiful thing too about multifamilies, like a loss of lease. So the downtime, the down period, the income we lost, we can recoup. The
nice.
disadvantage is that takes months to happen though, because the fire happens today, you rehab it, takes months to rehab it, gut it, get it back normal. Couple months lease up. So the insurance company is not going to pay on that income, loss of income until after you fix it and lease it up again.
Got it.
So there's a cash flow issue there you got to deal with as an owner. That is another issue. But tenants, insurance, uh, man, I'm pretty much a do-it-myselfer. I have been for many years. So I felt pretty good about contractors then, finding contractors to do the rehab. We
Yeah.
had a property management company that we found out was just inept. And we ended up, I became the contract, I became the property management for all effective purposes, the regional
Yeah.
manager. And I went out and found contractors, was doing all the paperwork on it, getting them reimbursed through the lender. Um, I was spending as an owner probably 15, 20 hours a week for many months, 6 months or so to get this straightened out.
Well, considering the fact that there were 139 units on site, 15 to 20 hours doesn't sound like a lot. That means the good news was the other buildings must have been in decent shape.
Yeah, they were not harmed. The 15 and 20 hours doesn't sound a lot, but when you have a full-time job on top of it
Fair.
and a family,
Fair.
that's not what I signed up for, put it that way, as an investor.
I
So
This property that we're selling that I just mentioned, I would ended up doing because it was we were rehabbing it right after COVID hit, and we had trouble getting contractors at that point. So I ended up doing all the painting on the property, or most of the painting, not all the painting, but I did probably on my weekends in between my job and like I
yeah,
think this is before we had my daughter. So she's 3 now. So because I think I showed my wife the property when it was finished when she was pregnant. Like so I said, here's what I've been working on every weekend. And she's like, oh, okay, at least I know what you've been doing the last like 8 months.
not sitting in some bar anyhow.
Yeah. Like
That's
well,
good.
because like it was literally like why do you have to keep going down there? Why don't you have guys to do it? And I said, well, we do, but the other contractors are doing the stuff that really you need someone skilled to do. I'm doing the painting because I'm not. I don't know how to do electrical. I don't know how to do plumbing. I'm like, you don't want me doing any of that stuff. Like that's. I mean, I'm gonna stick to what I'm good with. I can.
And hopefully it was a one-time deal that you don't do that all the time.
No, no. I
But
helped a little bit out on a project yesterday, just picking up materials. That's basically what I'm doing right now. I have guys who do everything because I'm with you on that. I spend my time doing what I'm good at and have them spend their time on what they're good at.
one of the lessons learned there is too is find out what you like. So a lot of people, I coach in a multifamily space, and
Okay.
people want to start out, they want to buy a single family home. That's great. I did it. You've done it. You're making a great business out of it. And it's fine. There's a lot of people who've been extremely successful. I was looking more for something that I could oversee versus I've done. I'm obviously older than you, Andy, and I've found the
You're not
nails
that
and
much older.
I bet
I'm
I am.
I'm in my 40s. I'm 46.
I have a 40-year-old daughter.
Really? Okay, I didn't think that. So you're about my dad's age. Got it.
I don't have a problem. I'm 67,
Yeah.
uh, but it's all good. But I'm not interested in climbing ladders and doing that stuff that I did before. But so for me, it was about passive income. And as I talk to these students about creating a business, uh, people just have to decide what they want to do. If they want to do single family, that's great.
Yeah.
Maybe you want to do wholesaling. Maybe you want to do buy and holds. Uh, I got into the multifamily space purely because of um, that reason. 139 units, 20 of them go down. I still got what 111 units that are running,
Yeah.
producing income, et cetera, et cetera. So the economy scales.
I'm with you on that. I do get the economy of scales, and you're 100% right on that. Ooh. But yeah, I'm not disagreeing with you on that. It's just more that it's more that when I look at this, I like you said, what do you like? I like kind of what you were talking about. I had owned some properties in Indiana, and it was a 2, 3 hour drive. And I couldn't stand the fact that if a tenant had a leak in the middle of the night and they called me, which has happened, then they're like, hey, what's going on? And I can't do anything. And I feel very powerless. At least if I have something on the south side of Chicago, it's a 30 to 45 minute drive. So it's definitely doable. Like I don't want to invest in the south suburbs even because that's too far. I want to have the ability, if I need to go down there, I can go down there.
Absolutely.
And
And it
that's
works for you. And that's people, investors have to decide, you know, investors have to develop their own, I call it their buy box, whatever it is they want to do. Um,
100%.
Single family, multifamily, there's multiple trails, paths within each of those. There's self-storage and other, for your listening audience, there's tons of opportunities out there. Pick a lane and master it before you try to go into another one is all I can say. But
Yeah.
um,
And that one of the things someone was asking me, well, can we, I was talking to an investor who wanted to invest with me. So they go, can we invest in like the western suburbs? I said we can, but I don't know, like I don't know the numbers there. I don't even have to look at my partner and I don't even have to like look at a property. We know the rough numbers before we even go in there. I mean, obviously your rehab is going to vary and like your purchase price and you have to make sure you do appraisals when necessary. But we know what a property is going to be worth in a certain area on the south side because we've looked at thousands of properties over there by ourselves. I can't even tell you how many properties I've been to on the south side. It's a lot. If you tell me to go in the west suburbs, I'm gonna be like, okay, this looks like a nice property. I don't know, however, if you're paying 250, if that's too much or too little for a basic purchase price, because I also don't know how much the rehab's gonna be, because it's gonna be different contractors and different pricing in different areas.
yeah, you're an expert in your market.
100%.
And you're an expert in your market and kudos to you and you're making it work and you made a business out of it.
Sounds like you're doing the same.
Well, it's just a different lane, as I would say, though. My point of it is to your listening house. It doesn't matter what suits your personality, or what do you want to do. There's just a plethora of opportunities out there. But the only thing I can say is I try to tell people, um, I think sooner or later, most single family guys that I know of sooner or later want to move up to something, whether it be a duplex or a 20-plex or a 100-plex, just because of those economy of scales issues.
Yeah,
That doesn't mean you have to, but sooner or later it's less work.
I get it. I don't know. I'm fine for this. I'm fine for it right now. I know
Yeah.
we've looked at bigger ones, so it's not like I'm afraid to do it. It's just that I haven't seen anything that really tempted me the same way some of the single families do. Like I haven't seen the same, not to say that there aren't, there definitely are. It's just like I haven't seen the same profit margins in the same span of time that I can make from doing single family. Like I said, if I can make 100,000 in 6 months, maybe 8 or 7 or 8, depending upon sales and rehab time and everything else, why wouldn't I do that? Because I mean, maybe
Well,
if I
you're
make
absolutely right
200,000
there.
for 18 months, that's not appealing anymore.
I tell my students the single fastest way to make cash in real estate is to flip houses.
Yeah,
The single fastest way to make cash in real estate is to flip houses.
yeah.
If you want to make cash and build a net worth, and then once you got, I don't know, whatever your number is, 500 or 200 or $1 million saved up, and
Buy a bigger.
Yeah, but then you
Yeah.
can buy bigger.
Let me ask you a question then. So you managed the property. You told us that part, and what happened? So go through what happened afterwards, because you eventually got out of this.
Well, I'm sorry. I lost track of that story. Thanks for bringing me back, Andy. So, property for fire, tenants first. Um, I just spent a lot of time, as I said, with contractors and all the things that you do and you enjoy. I don't enjoy as much. And so it had to be done out of essential, and I think I was competent at it. We got the property back up. In the meantime, the issue gets a little bit more complicated because we actually fired the property manager on site. Long story, but she had lived in the Reader's Digest version. She had lived in the building for 30 years, raised her family there. When we started to raise rents, she couldn't face the tenants and tell them because she knew them as personal friends that the rent was going up. Um, so fire reconstruction, fire the property management. We use third-party property management in a property that size. So we had to find a new property manager. That was a challenge. We worked through all that. I was on the phone. We're worrying about lease ups, maintenance requests, what prices we were going to charge for these new revised units because they were stellar, obviously. And the nice thing really about what's that?
I would hope at that point.
Yeah. And the nice thing about disaster like that when it hits, if you manage the property well, we actually made money from the insurance company in the end. Now, granted, there was a 6 month, 9 month cash flow problem there that we had to wait out, but we actually ended up making money by the time you get reimbursed with the insurance company for the loss of lease and the asset rebuild. So it wasn't huge sums of money, but it was good. So we lease it all up. We're finally breathing. We're all good, and we actually sold it 21 months. This whole thing occurred 21 months after we bought it. We ended up selling it and doubling investors' money in 21 months. Not as good as your 6 months
But
or
still,
9 months.
I'm sure it's probably a bigger number though, if it's
It is
that.
a bigger number.
Yeah.
It is a bigger number, but that's again, multifamily tends to be 5, 7 years at a minimum. A year of fix and flips are, like you said, you want them to be 90 days, 120 days max.
Yeah.
So
We that the one that I was telling you we sold that took 8 months, it was horrible. Because we had no contract. We had one guy working on it at one point, like for like multiple weeks because we couldn't find anybody. It was just bad.
well, and it's that, and especially in today's environment, I don't know what Chicago's like, but I mean, finding vendors and all the ICE problems we're having across America is challenging to continue to find competent vendors.
Yeah.
I have a couple assets here in Houston, and just to find competent vendors to do stuff is becoming more and more challenging.
It's yeah, it's hard to find vendors, and it's also material costs are going up as well with everything going on. So we're getting double hit, and like we're also seeing on the contractor side, leads are going down because people are afraid.
Yeah, I heard some vendor tell me the majority of lumber was imported from Canada,
Yeah.
thus is going to be hit with a tariff now.
Lumber and gypsum, which is the main component of drywall. So like Canada provides the vast majority of your supplies when it comes to that. Plus they also do. Plus I think they're also one of our larger steel imports or steel exporters or importers, whatever direction that is. And so yeah, so we're importing in that steel. I know that steel was one of the things that Trump made an exception to. So we're seeing a lot of different things going on with that.
Yeah,
So it's definitely starting to have an effect. That said, when the prices go up for materials, eventually that's why you're probably going to see, I'm hoping it won't be stagflation, but you're probably going to see some inflation going in there because of the fact that if prices are going to go up, then the only thing for properties to do is to go up. It's not going to be like 2008, 2009, where you saw a 20, 30% drop
yeah.
because there's not enough supply and there's also not enough reason to decrease the price that much.
And you hit it on the head though, because in your business and my business, the common theme is there's always something, there's always surprises. The business plan never happens as it was first drafted.
Yeah,
Uh, it just never does. Some of them are huge. Who would have ever predicted COVID? Nobody.
yeah.
So you got to plan for that stuff as an operator,
I
be it
remember
single
hearing about
family.
COVID in January. A friend of my wife's went to China or South Korea, and he was saying how he avoided COVID, and I'm like, what's that? Because I wasn't, I was like, sometimes I get into my zone and I don't pay attention to the news at all. And
Yeah,
he's like, "What's that?" And I said, "Oh, that's kind of sucks." And it's like, "Yeah." And I said, "Well, but it's in Asia, so we don't have to worry about it." And I wasn't thinking about it for another 2 months, and we're living our life, and we bought our condo where I'm at right now, and
yeah,
and a week after, that's when they did the shutdown order.
yeah. And you can't plan for those things. So
Yeah.
that's one reason, again, that I think there's value for your listening audience in multifamily is that you can get into real estate without having to do the what we call tenants, toilets, and termites. You can take the passive approach.
Yes.
You can be investor in somebody else's deal, like I was for a long time. Or I'm sure you take investors too, Andy, if you need to
Absolutely.
raise money. I mean, so not everybody is built for the challenges you and I face. But there are other ways you can get into it, through the single family your side or the multifamily my side.
Yeah, absolutely. And that's one of the things that it's definitely there's a lot of options out there. It's insane how many different things like because when you really get into real estate, people say, "I'm an investor." Well, what do you do? Like same as everyone else. No. No, that's not at all right. I mean, there's a whole spectrum of what you can do. And I mean, the amount of variety there is insane just because you have options.
Well, and I don't know about, I talk to investors too who say, I don't have enough money, Randy. I don't have disposable income. Well, you do. You might not realize it, but you can partner with somebody. You can form a trust or a partnership to invest with you or invest with me. You can use your self-directed IRA money if you've gotten IRA money from a previous employer.
Yeah.
And but I speak as a finance person at heart. That's how you boost your returns.
Yeah.
I came from a large academic medical institution here in Houston. They had a 1.5 billion, that's with a B, endowment, and anywhere between 8 and 12% of their portfolio
Is it real
was
estate?
invested in real estate. Now, it wasn't all multifamily, it was a bits and class, but my point of it is I'm trying to teach my kids today that you should have a portion of your assets in real estate beyond your primary residence, beyond your condo, your home, or whatever you're living in, just
Yeah.
because of the appreciation factor, the inflation hedge, diversification, and go on and on.
Well, also even the loan, when inflation hits, your loan becomes
Right,
less because it's like it's actually you're actually better off having loans when there's inflation because that means that you might earn more.
right.
Hopefully you earn more. I'm assuming you're earning more, and then your loan has to stay the same. Now, property taxes and insurance being the way they are, they've gone up a lot. Like we've had properties where the PI is stable and then our taxes and insurance have gone up $400 or $500 a month because of the way that stuff is happening right now. So it's just like you said, who would think that your taxes would double in 4 years, 5 years?
Yeah. And I'm in Houston, but you were telling me the price of a house on the south side of Chicago that I should say, a non-resident
Yeah,
floors me, that it's worth that much. But
yeah,
you're regentrifying the community, you're adding to the value of the whole community, everybody wins.
yeah. And I mean, I can tell you during the you were talking 2008, those houses went for $5,000, $10,000 when they were
Wow.
I mean, now you're seeing 30 to 50 is like those are the lower end of the market and those are gut rehabs. And like you don't want to get in there and get all the things. We go there, we're at the property. We're not like my partner and I don't do the work. We have guys who do the work. We're managing that process and we're going to the property. He's there every single day. I'm there at least a few times a week because I manage other things for us in addition to
Yeah.
that. So, but it's just like a combination.
That's what we call working in the business versus on the business, right?
True.
You're doing in the business, you're doing the strategy and the finding the next flip and lenders and all that stuff versus on the business out there pounding nails. And that's the same way with me,
Yeah.
uh, or rehabbing the unit. And
Yeah.
that's nothing against those people who do it. We need them as much too.
Yeah. I mean, I have to, after this call, I have to follow up with a roofer on a project. That's my first call after this. So, um, with that said, because I have to call the roofer soon, and I know we're actually over our time, is there any final thoughts that you want to leave the audience with, and also if there's any contact information you want to share?
Well, I'll help you put it in the show notes, but you can find me at invest-arc.com, invest-arc.com, and then my training education business is Multifamily Maestros, all one word.com. There's a contact page there. You can find me on the social medias, Facebook, LinkedIn, Instagram. Love to talk to anybody that has a question or two. I spend a lot of my time getting to know investors and potentially helping them out any way I can. So I just want to thank you, Andy, for letting me be on the show.
Absolutely. Thank you for joining us. And thank you, everyone, for listening to Creative Construction Chronicles. If you like this episode, definitely hit the subscribe, the like, the comment, all those buttons, whichever one you like, in whichever order you like it. Thank you so much for joining us. Have a great day and a better week.